G'day and welcome everyone. Hopefully this can be a bit more dynamic than your AGM section, which is always somewhat dry. So yeah, welcome. I'm Nick Erner, happy to be here and look forward to catching up with people over a cup of tea afterwards as well for any questions that they've got. So I'll be talking about our company, but in particular trying to give you an insight into why we do particular things as we do. This is really, as you'd see in everything, explaining that the things that I'm saying, they reference previous announcements, they draw on geological competencies, and I encourage you to read that online. This presentation will be online afterwards. So Alkane. The whole reason why we exist, of course, is to make money for all of us as shareholders. And we do that by being a mining company, we produce gold, and a successful exploration company. And then other things are involved with that. And the core thing that we think that we bring to this is a wide range of experience and competency in the execution of those two things. And I'll talk a lot about the explorations that we have, the successes that we have. But when you think about it, when you find something, we often get an appreciation within the share price of that discovery, where people think, oh, what could this be? But unless you then go and do something with it, in particular mining or transacting, then you can't actually see value from it. And that's where we apply the other aspects of exploration and success for the business. And in particular, we've been able to build up quite a strong financial position, which we're then deploying on expanding the life of Mingley. So we'll talk about that. So we'll go through these different aspects of the business. So if I look at the last year, what are the highlights? The first thing is that we did over 70,000 ounces of gold at Mingley. We thought we would do less. That's because we ended up mining a higher grade than we thought we would get from those sections. So we outperformed in that area at a good cost of production, which we're very happy with. We picked up the exploration tenements from Sandfire, which was the transaction that Ian referred to. And I'll talk a little bit about that and tell you about why we like those tenements and why we picked them up and how that fits into our ongoing exploration portfolio. On the mine, the exploration drive that we did from Wyoming 1 down to Roswell arrived at Roswell, and we're now doing tight-spaced infill drilling there, which is the future of the operation at Mingley. So we're very glad that that position has been reached. As well as that, of course, we've got all the planning approvals for Mingley. And that is, I think everyone can appreciate in today's environment, no mean feat. I'll talk a little about that further as well. And we've drilled over 80,000 metres of drilling. Vast majority of that has gone into Boda, where we've done over, Boda and Kaiser, where we've done over 200,000 metres of drilling to date on those, which is a substantial amount of drilling to define those resources. And then, of course, right at the start of the year, we declared the initial Kaiser resource, which was just under 5 million gold equivalent ounces, and took the whole show there to just under 15 million ounces, which is a fantastic deposit, and more to come. So quite a big year for us, and a lot of work going on in the background, in particular at Mingley. I won't dive into this. It's all pretty self-explanatory to say that we are in a good financial position as a company. Our cash and gold bullion at the end of the last quarter was $85 odd million, and our listed investments, well, as of today, they're worth about 11, but they're around $9 million there. For clarity, for anyone that's interested, we have completed the sell down of our shareholding in Genesis Minerals. So that transaction netted us a bit under $60 million over the whole thing. It wasn't the purpose of the transaction, but so we no longer have a shareholding in Genesis Minerals. We have quite a low daily turnover at $500,000 a day, and we have only a few institutions on our register. The majority of foreign institutions on our register are index funds. So that because we've moved in and out of the ASX 300, we have index funds in our register, and they're the vast majority of any institutional holding that we have. And Mr. Gandel holds just under 20% of the company. So Mingley, there's a map of it which has been in presentations for quite some time. That's from Mingley all the way down to Peak Hill that you can see. So what do we have there? We have right now a 1 million tonne per annum process plant that we installed in 2013, which has been running since 2014. That process plant as of today, we're running at about 1.15 million tonnes per annum at the moment, but we've had approval to expand that to 1.75 million tonnes per annum, and we'll talk about why that is. We have about 230 people working there, plus contractors. Most of those people work in the underground environment. Our production guidance for next year is 60 to 65,000 ounces at 1,750 to 2,100. We've seen both price increases and also we're transitioning to Roswell at the moment where we expect a higher grade. So we're in some lower grade areas within the Wyoming 1 deposit at present, which affects that cost per ounce. We've finished all the open cut work until we do the San Antonio deposits there, but we are mining under 3 deposits. I've got some pictures to show you coming up for there. And we continue to drill for further resources underground, under the existing deposits as well. So actually, when we made the decision to go under that, we had a mine life to 2022. That deposit as it stands now, we've got a mine life into 2025. This is without including San Antonio and Roswell. So we continue to extend that resource underground. And we have quite large resources remaining, and we intend to mine over the coming decade. So here's some photos. I realise I really never show any pictures of what we're doing, sometimes just schematics. I thought I might put some live pictures up, well, not live, but you know what I mean, real life pictures of up so people can see it. There's Matty, our maintenance, underground maintenance planner. We're pouring some gold. Over to the right is one of the loaders, 2100s, loading a truck underground. We have Jeffrey looking at the carbon scout, which we use to measure the amount of gold in carbon on it. It's a jumbo operating at one of our faces. That looks like it's an ore face down there. And then we have Jivani, one of our geologists, just doing face sampling, posing nice. She's not actually doing face sampling at the moment. She's posing very nicely for post-paste sampling at the moment. But they're the kind of things we get up to. So we have 230 people doing all this stuff day in, day out. In particular, we have people in the plant, people underground, people pouring gold, and then support systems in and around it. So here's our mining areas underground, right? So this is looking at that picture from underground from the northeast. So to the north is the road up to Dubbo, so we're looking from the northeast down, and we have here Coloma 2, Coloma, and Wyoming 1 in the pictures. And what you can see there in the colours is the areas that we're going to be stoping underground in the coming 12 months. Right, so that's just to show you. So you can see that particularly Wyoming 1, all the development that you can see there is all areas that we've already gone and mined already. And right at the top, you can see the branch going off down to Roswell, San Antonio. So that's just to let you know what's occurred. And then in particular, these areas here and here, they didn't exist in our original mine plan. So that's extensional drilling that we've had. And at the moment, we've got some new blocks coming in. Oh, actually, I've got the wrong direction over here. And then also we have new blocks we're looking to open up under here. So that's nothing unusual about that. It's a very usual thing for an underground gold mine is to do extensional drilling because we've already spent all the money putting everything in here to get to these different heights. So that's what we continue to do. So that's the areas in FY24 through to June next year that we'll be mining here. And I'll come to what we're doing at San Antonio Roswell. I think one thing that I really want to point out is over the years, you can see we've mined down here and we've actually poured our 600,000th ounce last month, but we've added to the resource and the reserves as well. And this will then start to trend down again because it's the nature of mining. You deplete the reserve and turn it into gold and then and cash. And so we'll talk a bit about the exploration as to what it is. But we have now a 10 years in front of us now, which is great. And we consistently meet and exceed guidance, and we'll be looking, of course, to ramp this up as we expand the mine going forwards. Oops, sorry. And that is all based on this project, which we poured effectively 5 years into. Because if you think about it, we first discovered, even though we were highly confident of that the gold deposits at Roswell in 2018 was the first drilling that we did in that. And then through 2019 and 2020 and a little bit of 2021, we did the resource drill outs of that, and then we entered the approvals process for that. And so we had our first consultations with government around moving the highway nearly 4 years ago. And we had our first draft submissions for what the planning approval might look like. We had those in late 2021. And so that's what it is. And we've moved as fast as is possible within that system in terms of the timing and the studies. And that's why the exploration pipeline that we continue to work on is important, and it's also why having 10 years ahead of us is a fantastic place for us to be. So here's just some of the approvals that we've received. We got the project approval in February. Cascading off that is environmental protection licence and the mining lease. We already had secured additional water licences. We now have a completely 100% signed off road plan with Transport for New South Wales. And the exploration drive is now down here. So red is all our underground development that you can see. It is already done. And this is the new residue storage facility in its late stages of construction here. And then down here at Roswell, we're clearing for a paste plant on the surface. And the highway will be diverted out and around like this. But you can see here's our, we have a vent rise up here. We have a second vent rise here and vent fans underneath. And I'll show you some of the drilling that we're doing under here. So we're positioned. This is all systems go. We have designs underway for a solar farm, actually off the picture, but up to the northwest at the moment, which will then come for FID next year, so our investment decision next year. And as well as that, all through this area, we have a team looking at the biodiversity. So one of the way things work, if you impact anything in New South Wales that is considered biodiverse, by that it just means it's not ploughed farmland, then there's an offsetting arrangement that goes against that. So we have areas that we seed, plant, and then put aside for biodiversity. And we're working on that, and we're doing a lot of stuff within these old farms to put areas of that aside. Up at Maclean's, which is about here, we've added in other inferred resources, 70,000 ounces, and we have a debt facility with Macquarie. We expect to draw that within the first half of next year to fund the activities that I'm talking about. Then we'll get Roswell to steady state. So in the second half of next year, we expect that Roswell will be stoping, drawing ore, and it will be within its cycle and sequence. We'll have the paste plant up and running. And that's when we then kick in the Newell Highway diversion and the San Antonio pit development, with production ramping up to 100,000 ounces. So from Roswell alone, with a higher grade, we expect to be at an 80,000 ounce run rate, and then when the open cuts kick in, we expect to be at 100,000 ounce run rate. To show you some of the other things that are occurring, so this is the new residue storage facility. This is the first cell of that, cell 1, that's complete. You can see the very first tailings just going out into that. Cell 2, which you saw in the other picture, is finishing construction. These cells have a combined 3 million tonnes capacity, so if you think we're moving to 1.5 million tonnes, then it's a 2-year capacity. The thing to be aware of with that is, of course, because we're doing paste fill underground, it's not just happening each year, so there's several years worth of storage capacity here. And not only that, we've already got the allowance to lift the walls further already included in the approvals. So that's really good. So that's a key blocker that's sorted out. And then this is underground at Roswell. So we have these development drives in and position, and this is where we have 3 drill rigs. This is nearly complete, actually, and we're just moving a rig up here at the moment. This drilling is at 10 by 15 metre spacing, so really moving the ore body to a reserve level in this area. And then once this comes in, we're doing our exact stope design. So we had a preliminary stope designs, but now, of course, we're going to have tighter space drilling, a lot more information. So that's where we're at. So before the end of the year, so I know we've only got a month left, we're developing from here across into the ore body there. And then we start doing development through here, through next year, and then we start stoping as we approach the middle of the next year for full-scale production. So we'll have our first ore coming out of here, but then we get steady state in the middle of the year. And then we start doing paste fill in the second half of the year at Roswell. And that's a higher grade, which is why we're trying to bring that on as quickly as possible. This is the paste plant. Well, it's what the paste plant will look like. At the moment, it's just freshly cleared land and rebuilt and compacted, ready for this structure to go onto it. So the long lead items are already ordered and under fabrication for this, and we're doing the earthworks. We expect to be commissioning that in around Q3 next year. To explain what a paste plant is and why we have it, if we go back to this picture, these stopes are, let's say, in this particular area, 15 metres wide, 20 metres long, and 20 metres high. For instance, right, they do vary in shape a lot more than that. If you think of the underground structure, we leave pillars behind. So you need to have a structure that remains competent and doesn't collapse in on itself underground. And so you would normally leave pillars behind. That's what we've done. So bits of rock that are never mined, we've done that within Wyoming and Coloma. We've put rock fill in as well. However, if that is in an area with gold in it, then you're just leaving gold behind. You spend all that money to get there. So what you can do is backfill it with paste, which is effectively a low-grade cement using tailings material and cement, and then you pipe that in and you put it in like a concrete. It dries out, and then you can mine in and around it as if it's a rock mass again. That's what we're doing. That's why we're doing it, because the grade here and the widths and the size is too valuable to leave pillars behind. That's what we're doing. That's why we have it. So a paste plant works basically, you have a cement silo, and then this filters the tailings, and then once that's filtered, so you get this sort of sand-like cake, as if you picked up wet sand at the beach, the two get mixed together, forms a slurry in the mixer, and then that gets pumped underground. It's as simple as that. It's obviously a lot more challenging to do than that, but it is that simple. So that's what we're building there at the moment. And then at the plant, so the Mingley Plant, you can see this is already constructed stuff in the background. There's our stockpile, the feed, the mill that exists. We are putting in a flotation and fine grind circuit to improve the recovery. So not only at Coloma but at Roswell, if we want to lift the recovery up by several percentage points, we have a section of the ore that needs to be milled finer. And so what we're doing is we have a circuit here that it basically diverts material across, and we run a series of flotation cells, and then we regrind that, and then that goes into the leach circuit. So what you have is a portion of it that will float is much finer grind. You increase the recovery. To give you an idea, Roswell recovery moves from being about, say, 85% to about 92, 93%. And that pays back. And so that's why we're doing that. And all of this is built to be able to go at a 1.5 million tonne per annum. So it's all sort of future-proofed as we understand it for what we can do. So at the moment, this is detailed design. We've got long leads ordered. So we've already ordered the thickener, the mill, the flotation cells, some of the electrical stuff. That's already ordered and being constructed overseas. But we're only doing preliminary earthworks here at the moment. Otherwise, I'd have a picture of that. So that's another major piece of activity that's occurring at present. And we expect to be commissioning that pretty much at the same time as the paste plant. Obviously, we'll get those two to race each other because the two operate together in the sense that the tailings from here goes across to the paste plant. So that's Mingley. Take questions on that afterwards. Also, really I want to point out how successful we are at exploring. So this dark blue area is our tenements in central New South Wales. So this is the mine site, and of course here we have where Boda is, and here and a little bit up here is where we picked up off Sandfire, and we have these other tenements. I'll go through what those are. So we have a large team. Ian leads that team technically, and we have, including the people that work in the field and stuff like that, we have circa 20 people, several people on contract. And we're very successful in actually developing its discoveries. So what I mean by that is, if you take something like Mingley, first discovered 350,000 odd ounces in the mine plan, we've got a lot more value out of that deposit by being prepared to develop it ourselves than we got from transacting that at the same time. Separately, however, the discovery of McPhillamys by Ian and the team, which is down here, and then sold to Regis, that transaction was joint ventured into Newmont, which stopped Alkane spending cash on it, and then transacted out for 150, of which Alkane got half. At the time, that was a bridge too far for the size of project that was, and we're seeing Regis is only just bringing that into fruition now in its own approval. So we're prepared to do either of those things depending on how we think we can make the most money in the short and medium term at the time. And I think that's a really important thing for a company that's exploring to do. At Tomingley, the reason why we explore there is, like I talked about, there's an approval pipeline, and if you don't keep that fed, then you can find yourself at a point where you have this significant asset that can't run. And what we do first is, of course, we increase our knowledge, and Ian can answer more questions about this, and then we steadily increase our drill density. So we start with non-invasive techniques, then we wear out the shoe leather and get out there and map it and take rock chips and samples. Then we do an air core program, and then we continue to run non-invasive techniques over the top, and then we do an RC drilling program, then we do a diamond drilling program. Each of those steadily increasing the expense, but we should be steadily de-risking the project as we do it. We continue to be very cost effective. San Antonio Roswell, per resource ounce, and there's been a large conversion of that resource to reserve, costs us less than $20 per ounce, and at the moment the spot gold is $3,100, so that's not too bad. And Boda Kaiser costs us less than $3 per resource ounce equivalent. The reason is that's an enormous resource, so that's why it costs so much less. So onto Boda and Kaiser, and for when we come to Sydney and Melbourne, which Ian and I are going to the next 2 days, we actually have a whole, quite in-depth technical explanation as well for people that are interested that we'll go through there. But so, these are large resources, and if I can talk briefly to these two cut-offs. So the way that you estimate a resource is you say, well, what would be economic? And below that we'll discard it, and above that we'll put that into the resource. So this is our broad first brush attempt, which we'll refine as we get definition of a potential open cut and a potential underground resource that we did here at Boda and Kaiser. That's why we have those two different resources. We have a grade tonnage curve. But what we were able to define is an incredibly large resource here at Boda. And even though this is now the surface mineralisation, but our initial resource didn't extend that far, and at Kaiser. These are very, very big resources. And we have spent a lot of money here, and clearly as a company we think that this money is justified. We've moved to spending over $50 million here, 200,000 metres worth of drilling, and we've spent roughly $20 million the last 2.5 years per year. Going forward, we'll be spending less than that, and I'll explain why that is when we get to that slide. As well as that, because we're now going to the next stage of resource definition, we need to know, well, hang on, this is all really interesting, but can it be recovered? What might the economics look like? That's the work we've been doing. So we've spent a large part of this year coming up with, through a series of flotation tests, and this is a second phase, we did a first phase before we put out the initial resource, a series of metallurgical results. So this is a pretty standard flow sheet. So you go to many gold, copper concentrators around the world, it will look like this. You'll grind it, you'll do a rougher flotation circuit, that will go to tailings. This is actually roughager and scavenger circuit. You'll grind it a little bit further to increase liberation, and mostly so you can then remove impurities, because in a cleaner bank you're basically floating it again, but because you've found fine ground it, some of the gangue material won't then float, and therefore you'll lift the grade, and then that is thickened, filtered, and you sell it. Very, very normal. And then in our particular case, we're taking the cleaner flotation tail and we're leaching it just like as if it was at Tomingley, running to doré, and then it goes out to tailings. So things to note here, the impurities that we see in this concentrate in our first pass testing is very good, as in very few impurities. So fluorine is slightly elevated, but well within anything that causes penalties in concentrate sales. So that's very promising at grades of 24 to 25% copper, very, very saleable. So we're very pleased with that. And also these recoveries are, Boda's quite high and Kaiser is normal, or on the slightly lower end of normal for these deposits, right? And the reason for these is mineralogically they're different stages of the porphyry sequence, so that's not an uncommon thing. And with time we develop an entire geological and metallurgical model that entwine together, so we know as we mine it what areas the ore bodies return what economics. So what's next? We're doing a scoping level estimate of the plant design, so that's underway at the moment. We have an engineering company working on that. That's to cost what this might look like. We're looking at 10 to 20 million tonne per annum feed rates, to give you an idea. The reason for that is these mills have a certain size that they're designed at, and looking at how hard the ore is to put in one of these trains looks like it's about 9.6, 9.8 million tonnes per annum for the hardness that we have of that type of rock. So it lends itself to that. And the second reason why we do that is the size and scale of the economics of this make this more attractive. So in a large porphyry deposit, so if we go back here, the large porphyry deposit, here we have, just in Boda, 400, 600 million tonnes, right? You mine this for 20 years at 20 million tonnes per annum, you use 400 million tonnes, and I haven't even included Kaiser yet, and we're working on expanding those. So you're spending a lot of money on capital on these projects, and they run for 2 generations. And so saying, oh, we're going to mine this at 2 million tonnes per annum, we could, but then, we'd be locking into a 200-year mine life, right? And so you sort of feel like there's an economic position in there somewhere that balances what can we do as a company, what can we do if we attracted a partner in, and what could we do if we high-graded this thing ourselves. And so we look at those different scenarios to work out what brings our shareholders the most money. And then, of course, in the background of all of that, we continue land purchase agreements, land access agreements, and continuing baseline environmental studies, because each study we do needs at least 2 years raw data. So we're already collecting that information. So you think about the things that need to be done. There's land ownership, there's water and water sourcing, there's tailings deposition, and where does that go? And so all those things need to be addressed with time, as well as any impact on the physical environment and the biodiversity. So we're continuing to do that work in the background, all de-risking. So that's underway at the moment. And so this is the program we have coming up. So we're now moving to spending roughly $5 million a year going forwards, because there's not a lot more we need to know about Boda and Kaiser on a geological sense, apart from within the ore body. It's around the extensions of it. Does it repeat elsewhere? So if we look here, Boda 2-3, we had this hole 94 that we drilled. It was just in there at the top end and at the bottom end of Boda. Really interesting, a high-grade blob. We've got some holes going in around that in the coming few months. Up at Murga, we have a skarn. We're doing RC drilling there. We've already done some air core over that previously. Drill Creek in through here, we've got a whole heap of intrusives. So we're doing RC and diamond drilling there pretty much continuously across the next 6 months. And then at Connigan here, where we've done one hole before, we're as well as that, we're doing some further RC and diamond drilling in there. And the thing that I really want to stress, people often say, well, why are you here and then you've gone there? Obviously, because we're drilling holes and we don't know the result until we get them, we don't know whether they're good or bad, and it changes our view. So if we go to Connigan and we think these are our best targets and we drill them and they've just got a really weak mineralisation, well, we don't tend to do the next, we don't tend to do for holes 4, 5 and 6. We do holes 1, 2, 3, and then we go, oh, that's not quite what we want. How we misinterpreted that? Let's go back and look at the data. So certainly this is our time frame, but obviously if we went to Murga and we drilled something like the Boda discovery holes, well, we would turn our attention there. We'd be up there with bells on and we'd drop some of the other things and push them further down the tree. That's just the way it is. But outside of that, across the broader group, our team is very, very active. So at Tomingley itself, El Paso to the south of San Antonio, Plains to the right of San Antonio, Glen Island, Allendale up to the north. We're doing air core, RC and diamond drilling across that next half a year, all trying to understand, well, where's another area within the immediate mine footprint that we could bring in, sort of in our case to be from years 2032 to 2035, say. So we're doing that early work. At that's obviously all for gold. At Rockley, down here, which is south, well south of Bathurst, sort of in the slightly hilly country there. We're doing RC drilling at one of our deposits here, looking for gold. Mount Conqueror, which we're very interested in, might be a McPhillamys style deposit. We're doing some diamond drilling there. We have one of the targets in May, June. Armstrong's, which is down south of Parkes, all part of this one long belt. And remember that London Vic was down here around near Parkes. We're doing some air core drilling, so this is really broad brush, wide space stuff, looking for repeat mineralisations, looking for a Mingley style thing. And then a bit of a sleeper for us, because we're right back at doing the early stage work, we're taking the knowledge that we've gained at the Northern Malong Porphyry project around Boda and Kaiser, and we're applying that for how do we zero in on targets similar-ish down here at Southern Junee Porphyry project. So we're starting that with gravity, and the guys have been doing a lot of background work rediscovering old data. So this will slowly rise through the system, particularly if we get early encouragement. The whole purpose of this as well is another large copper, gold, copper porphyry. And again, of course, as we get different information in, we continue to tailor our targets accordingly. But our rough budget on that's about $5 million a year going forward. And then, so looking ahead, we've got all the studies that we're talking about. So we'll continue to work on those, in particular, some of those conundrums about development that we need to work on. We'll do that early stage exploration work I just talked about. We'll get that Boda and Kaiser resources out. Boda resource is waiting on, we have a geostatistical consultant that we're waiting to send us that report back. Then we incorporate that into our models and send it out. So maybe, I don't know, like first, second week of December, we hope to have that out. Kaiser is more like late February, early March, because the drilling for that doesn't finish until later in January. Then we have to get those results in and go through the same process. Basically, really getting on and delivering the basics of Mingley is a large part of what we want to do, given that's the engine room of finance for the company. And getting that underground mining sorted out and the sequencing, including paste, is a really big thing that we want to do. And getting the plant upgrade done, and then continue to actively manage investments and evaluate partnering opportunities for Boda. Little teaser right at the end, so you can have it right there to ask me more questions. So basically, we have a remaining shareholding in Calidus. We own about 9% of that. Calidus has had a difficult road coming into production, but they're now at steady state production, and they're looking at satellite deposits and other lithium stuff. So they're doing a lot of things to create value. So we're watching that closely. We think that holding on to that investment makes sense for us versus trying to discard it, particularly as a 9% shareholder. And then partnering opportunities at Boda, where we think once we've done the resources, it'll be a lot more understandable to third parties as to what we're talking about with Boda and Kaiser. And what I'm flagging there is absolutely we're open to talking about other people about joint venture options or earnings or other things that reflect the value of Boda as we see it, which we see is very valuable, but can still advance the project as well. And so that might be money that comes in from a massive large-scale exploration effort. It could be early-stage development stuff. That's what we're looking at when we say partnering, right? So it needs to be something that advances the project. We don't need to just simply do a transaction. We need to keep that project moving forward so that we're adding value to it, and we'll de-risk it in the background. And, those discussions, of course, are already underway. That's it. Reminder to anyone who's still listening that we are going to Sydney and Melbourne to talk to investors there, but happy to take any questions here.
How much is the diversion rate on the new highway going to cost the company?
I think it will cost between $40 and $50 million. And so that will include the diversion road of the highway, and that will also include some other roads that tack into it. There's a road to the west and a road to the east, both local roads that both need to have the intersections redone, and in one case a bridge put in for our trucks to go underneath. That exercise for the trucks is about $10 million.
How much will the plant at Boda Kaiser, probably you don't know the rough cost?
I don't know. We'll find that out by March. Yeah, so we'll be able to put that out in March. Yeah, but that will be hundreds of millions of dollars. Yeah. So. Yeah.
Do you do any gold hedging at the moment? Sure.
We do. So we have, as part of being able to take out the debt, obviously anyone lending you money wants to know that it can be repaid, and they have a financial protection they put in that. So we took out 100,000 ounces of hedging for that. And the hedging for that is roughly even, but not it has a profile that runs from the start of 2024 until the end of 2026, 100,000 ounces. The average price across that period is about $2,826 Aussie per ounce.
Also in the annual report, I saw a statue of a Glenn McGrath. Did he come from Dubbo?
Narromine, yeah. Yeah, he's got nothing to do with the company. But we do sponsor a lot of community stuff in Narromine, so, yeah. Any other questions? Yeah.
What's going to be your power source to run the processing plant
At Boda Kaiser?
all over?
Okay, so Tomingley is already connected to grid power, and so that comes from the New South Wales grid, and so that's a predominantly coal-fired power station thing of it, but it's got, obviously a wide range. We just buy off a supplier there. And so at Tomingley, one of the things we're looking at is a solar farm. We're in the late stages of getting that designed for us by a third party. So one of those arrangements where a third party builds it and you agree to buy the power off them for a period of time. And we're looking at a 10 to 15 megawatt power station there. The power draw at Tomingley is around 10 megawatts at the moment, but moving through 12 to 15 megawatts at full noise. And so that will be something that we hope to have built by the end of next year, assuming all the figures stack up. At Boda Kaiser, we haven't really evaluated that yet. There's a wind farm right on top of it, but that would be grid connected as well. So that would really depend by the early 2030s what the market is and where it comes from. Yeah.
So your operation is 24 hours, or?
Oh yeah, 24/7, 365. Yeah.
So you're taking full advantage off peak, on peak power.
So the way that power pricing works for large consumers is you negotiate stuff that includes like flat rates and other things because it's constant. So we don't like do stuff at night that we don't do at day. We just do everything all the time, fundamentally. Yeah.
And of course, you're putting in energy efficient motors and LED lighting, all the lights.
Well, it depends, but we do anything that's cost effective. Yeah, that's right. And so things like loaders, at the moment we're evaluating a new type of loader to replace with that's 20% more fuel efficient, as many people are in the industry. Yeah.
Not electric loaders?
Well, electric loaders don't really work yet, right? Because you have a cycle of 12 hours underground, and these things have a ton of grunt, right? And so at the moment, to change them over, it would be every 3 hours with an hour charging thing. So it will come. But the next stage that we're evaluating is diesel over electric, so all electric wheel motors, but then effectively a generator on the back. They're very efficient in terms of the way they drive. You can see that evolving to being a fully electric in the future, but it's not yet something that's happened in the industry. The jumbos are electric, the developed ones that you saw. The trucks are all diesel. It's a similar problem, right? So because they, have a lot of grunt. Any other questions? Well, why don't we grab a cup of tea and...
Sorry,
on it?
I've got to officially close the meeting.
Well, you've already officially closed
No,
the meeting.
I haven't. I haven't.
Okay.
The whole meeting.
Okay, no worries.
But what I have to say, a couple of things. Firstly, Nick, you're 100% right. What you said before about your part being more interesting, I'm with you. But thank you very much, everybody, for coming. Officially close the meeting. And just as a reminder again, that Nick and Ian will be in Sydney and Melbourne. Melbourne tomorrow, Sydney Thursday. So if anybody is travelling, you get the opportunity to ask them questions in Sydney and Melbourne as well. So thank you very much. Would you like to join us for tea, coffee, and any other questions?